Hello friends, today I am going to record a lecture on section 148 proceedings read with section 147. Although in our YouTube channel maximum number of the cases are there on section 147 proceedings, because nowadays the most litigant section is section 148. Earlier the time was that the proceedings were initiated in the scrutiny proceedings under section 143 subsection 3 and very few proceedings are taken under section 148. But nowadays the department is using section 148 proceedings in a very casual manner, and section 143 subsection 3 proceedings are very less in number. The reason is that, according to me, the revenue has become a little bit lethargic. For section 143 subsection 3 proceedings, the revenue has very limited time to issue the notice under section 143 subsection 2. But in section 148, the revenue has been given a very long period, that is 10 years. Although there is some bifurcation between 3 years and 10 years, after 3 years the department can go only when the income escaping assessment is 50 lakh or more. But it is not a difficult task for the revenue. Even if the income escaping assessment of the assessee is not 50 lakh or more, even then the revenue sometimes issues the notice by quoting the same figure 2 times, or sometimes they issue the notice by taking both credit and debit transactions. And the whole purpose of issuing the notice under section 148 read with section 147, especially in the regime of faceless, has become a very painful exercise for the assessee and the professionals. The reason is that whenever the revenue issues the notice under section 140A clause B, they have the mindset that whatever the submission the assessee is going to make, in 99% cases the revenue is not going to consider those submissions, and they are not applying their head that what submission the assessee is giving, whether it is a fit case for issue of notice under section 148, and the pain which is added in this process by the arbitral approvals by the Principal Commissioner of Income Tax or by the Principal Chief Commissioner of Income Tax add spice to that whole process. As we know that in the earlier regime, directly the revenue can issue the notice under section 148, that was prior to 1st April 2021, and the whole process of assessment was guided by the Supreme Court judgment of JK and Driveshaft. In first 10 minutes, I will be giving you just an overview that what was the old regime and what is now old regime, and then we will move to the main integrities of this deliberation. Earlier the process was that the income tax officer will issue the notice under section 148 and ask the assessee to file the return. The assessee will file the return of income. Then the assessee will get the right to ask the reasons from the assessing officer. The assessing officer will supply the reasons. Then assessee will raise the objections. Then the assessing officer will dispose of the objections and the proceedings will start. It was observed by the Central Board of Direct Taxes and by the legislature that the assessing authorities were not following this process which was prescribed by JK and Driveshaft. So they introduced the procedure of section 148A in the form of the ratio which has been laid down by JK and Driveshaft case into section 148A. Now, broadly, what section 148A says, that first of all you will make the inquiry if required under section 148A clause A, then you will issue the show cause notice, the assessee will give it submissions, and after considering the submissions of the assessee, you will decide whether to issue the notice under section 148 or not. But earlier also, the judgment of the JK and Driveshaft was taken very lightly by the revenue. It was a formality which the revenue department was doing, and even in the new regime also, the whole process has been taken so lightly that it is just adding misery for the assessee and the professionals. Whenever some assessee comes to us, and even if a genuine case is there, then in most of the cases, I am not saying that in almost all cases, but in maximum number of the cases, it has been seen by me also and my professional brothers also, that whatever the submissions we are giving, they are not even reading it, because if they will read with an open mind, then a lot of litigation will reduce. And it is very surprising that in India, the most litigant department is the income tax department. They are just passing the orders without using their brain, without application of mind, and I do not know what is in their mind, that they are thinking that every assessee is a thief, is a not paying their taxes according to the law. And in addition to that, I have seen that the whole income tax department, beginning from the income tax officer, and whether it is CIT appeal, because it is the first appellate authority, it is more or less a part of the revenue department, the additional commissioners, the higher officers who are giving their approvals like principal commissioner of income tax, principal chief commissioner of income tax, and even the central board of direct taxes do not have the regard for the judicial decisions which has been passed by our various tribunals, high courts and Supreme Court. This is the main reason that the assessee is suffering. The principle of natural justice has become a mockery in the income tax proceedings. Now, with this broad guideline, I am starting my session with the point that what is the purpose of this session? The purpose of this session is that we should raise those grounds which help us in the appellate proceedings. We should take these grounds at the very initial level, because if you will not take these grounds at the initial level, then it may happen that when we will be fighting our case in the appellate proceedings, then the court may say that why you have not raised these grounds at the earlier stages. It is difficult to get them admitted, although they are admitted because our courts are very disciplined. They pass the orders in very sensible manner. It has been seen that in the tribunals, 80 to 90% judgments come in favor of the assessee. It shows that the quality of the orders which have been passed by the assessing officers and the first appellate authorities, that is the CIT appeals, they are very illogical. They are not based on facts. They are not based on law. They are just passing the orders just to complete their targets. Someone was telling me that in India, there are nearly 6 lakh cases pending at the CIT appeal level, and there are only 250 CIT appeal in India. So on an average, there is near about 2000 cases which a CIT appeal has, and they have to pass at least 50 orders in a month. So just to complete that target, they are picking up only those cases which are related to the demonetization, in which the assessee is not appearing, and all those cases in which the assessee has given the submissions of 10, 20, 30 pages, they do not have the time to complete them. It is a very hard fact, and it is very painful for the professional because there is no disposal at the CITAP level. Now, the purpose of this seminar is that I want to give you some trigger points with the help of which you can win your case on technical grounds, on legal grounds, because what I have seen in my practice, that whenever a notice comes, whether it is in the form of a show cause notice under section 148A clause B or regular assessment proceedings notice. For example, if an assessee receives a show cause notice under section 148A clause B that you have entered in some bogus purchases and the revenue has received some information from the investigation wing that some entry operator is there, he is involved in some entry accommodation business, and from that it has been seen that the assessee is involved in some accommodation entries and they are taking some purchases from them. If this allegation is there, so what the assessee do? They start collecting their papers. For example, they make an allegation that you have made a purchases from ABC Private Limited and these purchases are bogus. So we start collecting the papers like purchase bills, their confirmations, their bank statements, and we directly upload them without raising any grounds about the validity of the proceedings under section 148. Friends, my point is that first of all, we have to challenge those show cause notices on various grounds so that the assessing officer should know at the very beginning of the proceedings that this assessee is aware of the law and I cannot pass any order, I think, in their wisdom. So whenever you receive a notice, first of all, you have to see that whether the assessing officer has the power to issue that notice. The first point in challenging those notices is that, for example, an assessee receives a notice under section 148A clause B from the jurisdictional assessing officer. There are two assessment part. One is jurisdictional assessing officer and one is faceless assessment unit. Friends, section 151A has been introduced. I have seen that a lot of my professional friends do not know about this section. This section says that no notice for the assessment proceedings can be issued now by the jurisdictional assessing officer. And what we are receiving nowadays since last 2 or 3 years is that the jurisdictional assessing officer is issuing the notice under section 148A clause B to show cause why the notice under section 148 should not be issued to the assessee. This section says that this section 148A clause B notice should also come with the National Faceless Assessment Center. Even the jurisdictional assessing officer has not power to issue this notice. And more interestingly, my friends, various high courts have given this decision that all these notices which have come from the jurisdictional assessing officer are bad in law, and the JAO, that is jurisdictional assessing officer, has not power to issue those notices. Telangana High Court, Bombay High Court and Guwahati High Court has quashed the notice under section 148A clause B which has come from the jurisdictional assessing officer. Forget about anything, because this notice is bad in law at the very inception. Friends, see, who can imagine that earlier the dispute was there when Ashish Agarwal case was there, that the revenue has issued the notices in the period 1st June 2021 to 30th June 2021 in the old format, while the new law was applicable from 1st April 2021. This litigation has gone up to a level, and then the Supreme Court gave the decision in favor of the revenue at the end. But even in that case also, a various notices have been quashed by the various high courts, because the revenue has not followed the procedure in that cases also. So the first takeaway from this deliberation is that challenge your notice under section 148A clause B by taking the shelter of section 151A, according to which the notice under section 148A clause B cannot come from the jurisdictional assessing officer. And my friends, Telangana High Court, Bombay High Court, Guwahati High Court has given the decision in favor of the assessee, and those notices have been quashed. Now we move to the second issue. Earlier, the notices used to come by the speed post. So when these notices come, the assessee gets alert that some notice has come. But since the introduction of this faceless regime, now the revenue is hanging these notices on the income tax portal, and they are sending emails to the assessee. Sometimes it has been seen that these notices are only uploaded on the income tax portal and no email has been sent to the assessee, or the email has been sent to the assessee but not at the registered email ID of the assessee. Friends, my question to all of you is that whether it is sufficient to upload the income tax notice on the portal, and whether it will be a sufficient service of the notice to the assessee. If we see by the journal sense, it appears that it is the sufficient compliance, because some of my friend was telling that in GST it is the rule that if the notice is uploaded on the GST portal, then it is a sufficient service of the notice. But friends, for this, my point is that there is rule 127, 127A and section 281, which says that this notice should be uploaded on the income tax portal, as well as this notice should be sent to the email ID of the assessee. So please check all your notices that whether the revenue has sent those notices your email ID, and if you are not aware or you are not able to find out that whether you have received this notice in your email ID, then you can file an RTI to the income tax officer that please tell me that you have sent this notice to me. So please tell me at which email ID and on which date you have sent me this notice. My point is that if they have uploaded the notice on 31st March 2024 to you, for example, this was the last date, but the email has been sent on 10th April. So whether the service of the notice will be deemed 31st March 2024 or 10th April, the law is that it will be the 10th April, which will be taken as the date of the service of the notice, and your notice will get time barred. Because on this, the various judgments of the various courts are that the notice should be sent to the email ID of the assessee also, and if the notice is not served to the email ID, then this notice is not valid, and the assessee cannot be expected all the times that the assessee is opening its income tax portal day and night and checking that whether any notice or whether any communication is there from the income tax department. So friends, check all your notices and the orders that whether they have been sent to your registered email ID also. In this series, you will be surprised to know that there is even the hierarchy of choosing the email ID by the assessee. For example, when we open our income tax portal, there is one primary email ID and second is secondary email ID. If the assessing officer issues the notice only to the secondary email ID and not to the primary email ID, then in that case also, that sending of the notice to the secondary email ID is not sufficient. He has to send that notice to the primary email ID. Or in this series, it has been laid in Rule 127 and 127A that if a notice is issued for an assessment year, then the notice should be issued first to the email ID which is related to that assessment year. If email ID is not available for that assessment year, then the assessee has to go for the email ID which is there in the last return filed by the assessee. If that email ID is also not available, then the assessing officer has to check with the MCA portal whether any email ID is there or not. So there is a procedure. It is not like that the assessing officer can jump to any email ID available with him. Friends, these points are very important because we do not challenge our notices and orders on these grounds due to which the revenue do the assessment by their whims and wishes. So we should raise these grounds at the very inception. Now we come to the third point. We are receiving the notices nowadays in which the quality of the notice or whatever the allegations are made in the notices are very general in nature. There are a lot of judgments from the various courts that section 148 gives power to the revenue to issue the notice for the various periods which are very way back, like the revenue has the power to give the notice for 6 years, 7 years. So due precaution and there should be reason to believe for the revenue that actually there is escapement of income. In the old regime, the language was that the assessing officer should have reason to believe to issue the notice. Now, in the new regime, the language is that the assessing officer should have information to suggest that the income has escaped assessment. What the department is taking the plea that now they do not have the requirement of reason to believe to issue the notice, because now the reason to believe word has been conspicuously deleted from the statute. But for this, the courts have said that earlier regime, the reason to believe words were there, meaning thereby that the assessing officer should have really in his mind that there is some point that the income has escaped assessment from of the assessee. Now the words are information to suggest that the income has escaped assessment. So the courts are saying that when these words, magical words, reason to believe, and conspicuously absent in the new regime, and the words are information to suggest that the income has escaped assessment, then it shows that the assessing officer should have not only reason to believe but firm perception and firm thought that some income has escaped assessment. That information should be some very basic ground and very strong logic, because what we have seen that they are just issuing the notices in manner that the assessee has taken or given some loans. When the revenue is using these languages in their show cause notice under section 148A clause B, my friends, those notices are not as per the law, not as per the jurisdiction. For example, the revenue is issuing the notices like that the assessee has made sales and purchases which are from the accommodation entry providers. They are not even mentioning that whether you have purchased or sold. They are just making the allegation that the assessee has traded in stock market, they have taken some bogus long-term capital gain. They are not mentioning even the amount, that what amount is there which has escaped assessment. So the judgments are coming from the various high courts. They are saying that in the new regime also the reason to believe concept has not been taken away. In other words, the legislature has more cemented that reason to believe concept, and until and unless the assessing officer has a very honest perception or belief that the income has escaped assessment, he cannot issue the notice just for making the roving inquiries from the assessee. It is not like that the revenue will issue the notice by giving you a statement of entry operators in which some 50-60 companies are there and they are making the allegation on you that you have made the purchases or you have taken some loans from one of the entities from this. So these type of notices are not valid as per the various judgments of the courts. So friends, in technical terms, the courts are using that these notices are issuing on the borrowed satisfaction. What is borrowed satisfaction? The revenue, the income tax officer receives the information from the investigation wing or from the various other departments, and they issue the notice just by copy pasting that information and giving you the statement of those entry operators without mentioning even the dates when the assessee has incurred those transactions. So until and unless the income tax officer is alleging specifically that these are the transactions related to you and from these companies, then the notices which are general in nature are not as per the mandate of the law. So my request to you is that please challenge the notices on the concept of borrowed satisfaction. In simple words, it is the duty of the assessing officer that if he receives some information from the investigation wing, then he has to corroborate that information from your records. For example, they receive the information that you have received some loans from some entry operator companies, and the assessing officer has the tax audit report with him. So in that tax audit report, that loan is mentioned of rupees 1 crore. But the assessing officer receives the information that the loan is of rupees 50 lakh. So it means that it was the at least duty of the assessing officer to verify this amount from the bank statement of the assessee if he is having that statement, or he has to verify this loans from the balance sheet of the assessee, because nowadays the assessee uploads all the balance sheet, tax audit report at the time of filing the return of income. So blindly he cannot just receive the information and issue that information to you and issue the notice to you. So these type of exercise by the assessing officer by taking information from the assessee to make the additions is not the mandate of the law. The assessing officer has to do a lot of hard work. Now friends, the concept comes of the approvals which the assessing officer has to take from his higher authorities to issue these notices. There is section 151 which broadly says that if the notices relate to the 3 years, then the assessing officer has to take the approval from the PCIT. And if the notice is beyond 3 years, then the assessing officer has to take the approval from the PCCIT, Principal Chief Commissioner of Income Tax. When these approvals are taken, sometimes it has been seen that the assessing officer make the proposal that I have this information. He goes to the Principal Chief Commissioner of Income Tax, and that officer just write, yes, I am satisfied, or even sometimes they do not use these words, yes, I am satisfied. They use the word yes, and sometimes it has been seen from the various approvals that the assessing officer even types the satisfaction of the Principal Commissioner of Income Tax, and the Principal Commissioner of Income Tax only initials or put his signature as a rubber stamp on that. Friends, there are various judgments of the various courts that if the approvals for opening the assessment of the assessee under section 148 is not as per the reasons read by the Principal Commissioner of Income Tax or by their application of mind, or if they are issuing the notices and giving their approvals just by doing the signature and without application of mind, then in those cases the notices have been quashed by the various courts, various tribunals on the basis that these approvals are mechanical. For example, the assessee is filing a return of income and the reasons recorded by the assessing officer says that the assessee has escaped income because the assessee has not filed the return of income, and he also takes the approval from the PCIT, and he even does not see on the portal that the return of income has been filed by the assessee or not. The assessee has filed the return of income and you are issuing the notice that the assessee has not filed the return of income. So it means that neither the assessing officer nor the Principal Commissioner of Income Tax has applied their mind and they are just issuing the notices in a blanket manner. The second point is that there is instruction of the Central Board of Direct Taxes. First, they were issued in 2022 and then they were issued recently in June 2024. They have prescribed the format of giving the approvals. If you will see those format, then they have to satisfy on a number of points. For example, in that format, it is mentioned that what is the amount of the income escaping assessment which the revenue is alleging, and nowadays the notices are just coming in a very casual manner that you have entered into some fictitious transactions and they are issuing the notices. And sometimes it happens that when the show cause notice under section 148A clause B is issued, there is some A figure, and when they issue the order under section 148A clause D, then some other figure is there. And whatever the approvals are given, in that approval it is not mentioned that this is the amount of income escaping assessment. So all those approvals are bad in law. In those approvals even it is mentioned that what is the last date to issue the notice under section 148, because sometimes it is happening that the notices are beyond the prescribed time as per the limits under section 149. So even on those approvals, it is the duty of the Commissioner of Income Tax to mention that what was the last date to issue the notice and on which date the notice is being issued. If these things are not there, there is a complete format. I will share with you that format. If you will also type into the Google, you will get those instructions. So please correlate your approval which has been given by the PCIT or PCCIT with the approval of those formats, and if your approval is not in that format, then my submission is that you challenge that reopening on the basis of mechanical approval also, because that format is very, very comprehensive and it is very difficult for the revenue to complete those formats, to complete that information when they are issuing the notices, because it has been seen that when they issue the notice at the fag end, they do not have the time. So all these notices do not have any fate to get success in the long run, but it is the duty of the assessee that to challenge these notices on these grounds at the very inception, so that the assessing officer may know that the assessee with which he is dealing knows the law. He cannot treat him like anything and make any additions, because these grounds are very, very important. Now, the third issue. Whenever the notice under section 148, a clause B is issued, the assessee submits its submissions. The point comes that, can the assessee ask for a personal hearing at the time of show cause notice also? If we read section 148A clause B, C, D, or the whole procedure of section 148A, then nowhere it is written that the assessee can ask for personal hearing at that stage. There are some contradictory decisions from the various high courts. Some courts are saying that the assessing officer has to give the personal hearing to the assessee before issue of notice under section 148. The second school of thought is that because it is not written in the law, so the personal hearing is not required. But my friends, if you will read the instructions of the Central Board of Direct Taxes which have been issued in 2022 and in 2024, then there is clear cut written in those instructions also that if the assessee asks for personal hearing at the time of issue of show cause notice under section 148A clause B, then it is the duty of the assessing officer to give him the personal hearing. Now, for example, if some notice is issued under section 148, you ask the personal hearing in your submissions, but he did not give you the personal hearing, then you can challenge the notice on this ground also. Now, the section 148 notice is issued to you. You submits the papers. The revenue then issues you the show cause notice for making the additions. You ask for the personal hearing, and the revenue does not give the personal hearing. Then there is no doubt in that those orders are not valid. You can challenge those orders by the writ petition also. Now the question arises that you asked for personal hearing. You logged in at the time of the date fixed for your hearing. Because of technical glitches, the personal hearing could not take place. And the assessing officer immediately on the next day passes the order. Whether this order is valid, the court says that it was the duty of the assessing officer to give the another opportunity to the assessee that your hearing has not taken place because it is clear from the records, because the assessee tried to log in but he was not able to do that. All the logs are maintained. So when the personal hearing gets failed because of the technical reasons, then the assessing officer should not take it like that he has got the right to pass the order. It is also the duty of the assessing officer, because he is on a seat, that he has to do the justice. The purpose of the scrutiny is not to make just the demand. The purpose of the scrutiny is to calculate the right tax of the assessee. Income tax proceedings are quasi-judicial proceedings, and the strict code of civil procedure do not apply. So in that circumstances, it becomes the more duty of the assessing officer that he has to follow the principles of natural justice. Now, in the series of personal hearing cases, one more issue comes, that the personal hearing is only given by the assessing officer when the assessee asks for personal hearing. You have to go to the portal and ask for it. But the question arises that if the assessee do not ask for personal hearing and the assessing officer does not give personal hearing to the assessee, so whether in that case also, where the assessee do not ask for personal hearing, it is the duty of the assessing officer to give the personal hearing. For this, there is one recent judgment of Allahabad High Court that is very interesting judgment. The court interpreted that section in a very logical manner and said that if the assessee do not ask for personal hearing if the assessing officer is going to make some adverse order which is prejudicial to the interest of the assessee, then in spite of assessee not asking for the personal hearing, it is the duty of the assessing officer to give the personal hearing. Friends, that case is very beautiful, because again I am saying that the purpose of scrutiny is not to just hang the assessee with large tax liabilities and then penalties and prosecutions. You have to do justice with the assessee. The concept of odi adultum patrem is there, that one should be heard, and one should be heard means that the fair opportunity should be there. And friends, there are various circulars of the Central Board of Direct Taxes which says that if the assessee does not know about it rights, and if the assessing officer during the assessment proceedings feels that some benefit is to be given to the assessee, that benefit should be given to the assessee. So it may happen that the assessee may not be aware of his rights, and the assessing officer is on a seat where he knows the law better than the assessee, because he is making the additions of crores of rupees. So friends, that Allahabad High Court judgment is very beautifully written by the High Court, that even if the assessee does not ask for the personal hearing and the assessing officer is going to take a negative view against the assessee, then he should provide a fair opportunity of personal hearing to the assessee. Friends, some cases comes with a viewpoint that the principle of natural justice is the foundation of income tax proceedings, and they should not be kept under the carpet by the assessing authorities. Now we move to the next point. Generally, it happens that we ask for the personal hearing, and personal hearing is given once a time. Friends, my point is that sometimes we are in a proceedings where a lot of information is to be given to the assessing officer. So it may happen that in one personal hearing I am not able to make all the points to the assessing officer. So it is my suggestion that the assessee can ask for personal hearing in a way that the assessee can say that I need various personal hearings with every section 142 subsection 1 notice, because it is a genuine requirement of the assessee that he has to explain the assessing officer. One go it may happen that some points may be missed because there are the voluminous data. Now it is not like that you are keeping all the papers in the file and you are explaining the assessing officer. You have to keep the soft copies. Sometimes dealing with the soft copies is again a task. It may happen that your laptop battery gets drained, it gets shut down. So my point is that always ask for personal hearing with every section 142 subsection 1 notice, so that you can explain your case to the very mind of the assessing officer, so that he can do justice. Recently, on the personal hearing, one case related to the Central Board of Direct Taxes rejection order of condonation has come, and that is also based on personal hearing. Friends, I just want to discuss that case. That is really a very important case. For example, we are doing our case with the National Faceless Assessment Center. Now we do not know the officer that who is doing our case. Sometimes it is happening that our personal hearing is done by Officer A. It may happen that at the back end, when that personal hearing is done by that officer get transferred, and another officer B comes. He just log in and he sees that personal hearing has been done, and now he passes the order which is not in favor of the assessee. So if we come to know by any RTI or something like that, that my personal hearing is done by Officer A, but the order has been written and signed by Officer B, so whether this order is valid? That judgment says that the same officer should do the personal hearing and he should write the order and sign it. So if you receive some negative orders which are not in favor of you or in which some additions are made, my friends, my request to you is that make the RTI. Just ask in that RTI that please tell me that whether the same officer has done my personal hearing and has written and signed that order. So you can challenge that order on that ground also. Now friends, the next concept comes of cross examination. All we know that the word cross examination, when we see our movies, we see that when some court proceedings are going on, the advocate of one side calls the witness of the other side in the witness box and asks some questions. This is the process of cross examination. So first of all, the question arises that whether cross examination right is available in the income tax proceedings and why there is need to cross examine another person in the income tax proceedings. To understand this point of cross examination, you just take an example that some assessee has been issued notice under section 148 on the basis of the statement of an entry operator A, and that entry operator A has given in his statement that he has given some accommodation entries to various persons, and on the basis of that statement the case of the assessee has been reopened. I have seen in a number of cases which come to me that neither the assessee nor my professional brothers are asking in their submissions that on the statement of which the revenue is relying. For example, in the present case, the statement of A, they are not asking the right to cross-examine that person. Friends, my point is that the assessing officer is going to make the addition on the statement of some other person in the addition of my assessee. So until and unless, because that entry operator A is the witness of the revenue, they are relying on their statement. So it is the duty of the revenue to produce that entry operator A before me, and I have a right to ask that entry operator that whether you have given me the accommodation entries. And my friends, the courts have given the decision in favor of the assessee in a number of the cases that if the assessee asks for cross-examination at the assessment proceedings of the person on the basis of whose statement the assessing officer has made the addition, if that person has not been made available to the assessee by the revenue for cross-examination, those additions which are made on the basis of a statement which are recorded at the back of the assessee are very much bad in law. And friends, more interestingly, the courts have given up to level that they say that even the assessee has not to explain the reason that why he is asking for the cross-examination. It means that the cross-examination is a vital part of completing the assessment proceedings, because if the right of cross-examination will not be there, friends, any person will make the statement in favor of against any person. The department will use that statement, they will issue you the notice, because they do not consider our replies. They just write a line that your submissions are considered, but they are not tenable. They do not say that why they are not tenable. They just reject your submissions by making the journal allegations and by making some very unusual remarks in their orders. So friends, please ask in your submissions if your additions are going to be made on the basis of the statement of some third persons, then specifically write in your submissions that before taking any adverse view against me, please provide me the opportunity to cross-examine that person, and if you want to go some further ahead in this cross-examination point, then also write that I want to cross-examine that person on these grounds. For example, the revenue is alleging that you have taken a loan entry of rupees 50 lakh from A. Then write that I want to cross-examine that A on these points. First point, who introduced me to you? Whether I gave you cash in my office or I come to you or you come to my office. The third point is that what was the denomination of the notes which I have given you? Who introduced me to you? Whether you have your phone number, whether you have my phone number in your phone, whether I have directly contacted you or some intermediary is there, and any other question which may arise in my mind when I will doing actual cross-examination. So friends, cross-examination is a very important part of completing the assessment proceedings in those cases where the revenue is relying on the statement of some other persons. Now, the question arises, if the assessee do not ask for cross-examination at the time of assessment proceedings, although always ask at the assessment proceedings. Now, the first appellate stage comes CIT appeal. As all we know that it is a very trite law that the Commissioner of Income Tax has the co-terminus power of the assessing officer. So if you have skipped the bus, if you have missed the bus, then please ask this point at the time of the CIT appeal, and remember the CIT appeal that you have the co-terminus power with the assessing officer, and please allow me the opportunity of cross-examination of that person. Now, the second version of this, for example, you ask for cross-examination at the assessing officer level, and that assessing officer do not give you that opportunity. Now the matter is before CIT appeal. Now the CIT appeal says that, okay, you are asking for cross-examination, my AO didn't give you, now I give you the opportunity of cross-examination. So friends, in this respect also, there are the judgments of the courts that it was the AO who has to give the cross-examination, and it was the AO who has to make available that person to the assessee in front of each other, and then the opportunity of cross-examination should be given. So if the CIT appeal do the cross-examination, then it is not proper. The rule is that the AO should give you the opportunity. So you can use this ground for cross-examination, because the CIT appeal do not consider these type of grounds. It is very unfortunate. They do not follow the rule of law. They do not follow the judiciary orders. It is a very painful for the assessee. So as far as the cross-examination is concerned, I have also covered this point, friends. Now we are moving to the another point. Friends, whenever we receive the notices under section 148 or the orders under section 148A clause B, then as per the requirement of the instruction of the Central Board of Direct Taxes that was issued in 2022 also, 2024 also, and from the various judgments of the various courts and tribunals, it is very clear that whenever they are making any allegation on the assessee on the basis of some documents on which they are relying, that are technically known as relied on documents, then it is the duty of the assessing officer to provide you those documents. The another point is that if the assessing officer has taken the approval from his authority to issue you the notice, then it is written in those instructions that they should provide you the copy of the approval. So when you receive your notices, orders, and they do not provide you the approvals, then write to the assessing officer through RTI. First of all, you can simply write them, but if they are not providing you, you can directly go to the RTI website. You have to pay rupees 10, and then you ask all these documents, and it is the duty of the assessing officer, because RTI is a very strong weapon in the hands of the assessee to get all those documents. Because if you will not put up the RTI, then you will not be having these documents, and when you will be at the ITAT level, then your time will be wasted when the ITAT will recall these papers. So side by side, when your proceedings are going on, you just file the RTI with the AO that please provide me the copy of approval, please provide me the copy of the statements on which you are relying. All these documents are very essential, because you cannot challenge the approval on the basis of mechanical approval, on the point of mechanical approval, until and unless you have the copy of that approval. Friends, for this I want to discuss one very important case with you. In one search cases, it has been seen that the orders, 131 orders were passed, and when the assessee filed the RTI, that how many approvals the Additional Commissioner of Income Tax has given on the date on which the approval for the case of the assessee was given, it came to the knowledge of the tribunal that 131 approvals were given on the same day. And friends, see the law that the tribunal has given a ruling that that a human person cannot give approvals in 131 cases in a day, and the tribunal concluded that matter in a way that the approvals which are 131 in number are not valid, because when so much of the approvals are given in a day, it means that they are given just for the sake of signing the approvals, and the application of mind is not there, and the assessee won the case just on the ground that the approvals are mechanical. The another example is that there were 10 cases related to the assessee, and the commissioner gave the approvals of all the 10 cases in one letter. So the tribunal said that the approval should be year wise. It cannot be given with one approval, that in one approval you write that you are given the approval for the 10 cases. So friends, taking the copy of the approval is very, very important. Please ask in your RTI application with the revenue, because it takes some time. So it is better that you file these RTIs in time. Next friends, as all we know that in 2019, one circular was issued by the Income Tax Department that in order to get the trail of the whole proceedings, because it has been seen that some officers were sending the notices and they were not taking those notices on record, and to threat the assessees, to extort from the assessees, some notices were being issued. So now the document identification number concept was introduced, and it was made mandatory through that circular that each and every document issued to the assessee should bear the document identification number in the body of the order, and if that DIN number is not there, then the officer has to write the reasons why DIN is not there, and with the approval of his commissioner, he can issue you the DIN within 15 days or some time is there. Friends, my point is that if DIN is not there, and if he has not mentioned the reason for not giving the DIN in that order, then that notice or that order will become void ab initio, and there are a number of the judgments regarding this. Although in one important case that is related to Brandex assessee, Delhi High Court has given the judgment that that order is bad in law, and the Supreme Court has stayed that order. But after that also the judgments are coming which are saying that that stay by the Supreme Court is only applicable into the case of the Brandex, and that stay is not a blanket stay. So 2019 onwards, please check your notices and orders that whether they are bearing a DIN number or not. If you have got any assessment order, if the DIN number is not mentioned, if the DIN has been issued by some other intimation, letter, and the reason for not mentioning the DIN is not there in the assessment order, even then that assessment order is bad in law. So please take this ground of DIN, because it can become a very solid ground for questioning all the assessment proceedings, because now the DIN is a basic requirement. The orders which were passed in 2000 after October 2019 and in between 2020, there were some orders which were passed without DIN. So please check your orders and notices which were relating to that period, because now which the orders are coming, in that orders generally the DIN is there. But more importantly, the point is that the DIN is also required for giving the approvals for issuing the notices, because the revenue is making a lot of mistake, because there are no DINs in the approval letters which are given by the Principal Commissioner of Income Tax to the AO to issue the notice. So for every order, whether it is a 263 order, whether it is a 147 order, whether it is for giving the approvals, whether it is for issuing the notices under section 148, the DIN are required. So please take this ground, because this can become a very solid reason that your order get quashed by the higher forums. Although CIT appeal do not take these grounds, I do not know that why they are doing so. They are not following the judicial discipline. It is a very bad fate. Friends, we are taking 1 minute break, then we will come again. Welcome back, friends. Now we come to the topic that whether notice issued to an assessee who has already died is a valid notice or not. The importance of this topic become more important when there was the era of Corona, because in Corona a lot of deaths have taken place. The very important case of Supreme Court, in the case of Maruti Suzuki, says that assessment cannot be done in the name of a person or an entity which is not in existence. For example, a person has died and the assessing officer issues him the notice under section 148. Because the person is dead, it may happen that the notice is being received by the legal heirs, and when this notice is received, the legal heirs informs the assessing officer that this assessee is no more, so this notice is not valid. But the assessing officer does not take this factor, and he just passed the orders under section 144, that is best judgment assessment. So as far as this order is concerned, this is null and void, because the legal heirs informed the learned assessing officer, but he chose to pass the order without considering that reply. Now the second point comes that, for example, a notice is issued to assessee A and he is live at that time. But after receiving the notice, he dies. And if the legal heirs informs that the assessee A is not more, so in that case also the assessment cannot be done in the name of that dead person. Now the third category comes. The notice comes to the dead person, or the notice comes to a person and after that he dies, and no one comes to tell the assessing officer that that assessee is no more, and the assessing officer passes the order. But at the first appellate stage or the second appellate stage, it is the ground taken by the legal heirs that this assessment order has been made in the name of a dead person, that order is bad in law. So in that case also, my friends, that order is not valid in law, because the judgments say that it is not the duty of the legal heirs to inform the assessing officer that that assessee is no more. Because the point is that, because the court says that nowhere in the act has cast a duty on the legal heirs that they have to inform the assessing officer about the death of the person. Similarly, this case can be extended to the amalgamation cases also. For example, A and B company gets amalgamated into C, and after the amalgamation, the assessing officer is being informed by the C company, that is the final company. And even after informing the assessing officer passes the order in the name of the company who has got amalgamated into another company, because after amalgamation those companies do not get in existence. Their name is struck down from the records of the registrar. So all those assessment orders which have been passed in the name of the merged companies after being intimated to them are bad in law. In the same way, if a private limited company is merged into is converted into a limited liability partnership or a vice versa, and after conversion, the assessing officer passes the order in the name of the private limited company who has been merged into LLP, that order is bad in law. Similarly, if an LLP is converted into private limited company and the assessment order is made in the name of the LLP after being intimated to the assessing officer, that order is bad in law. In this series, the next point is that if a partnership form is dissolved, if the assessing officer is being intimated with a dissolution deed that sir, this partnership is no more, but even after being intimated, the assessing officer issues the notice to the dissolved firm and passes the order, that assessment order is not valid in law because that entity is not live at that time, at the time of issue of the notice or at the time of passing the assessment order. In that series, the strike off cases also comes. For example, a company is being striked off and the notice is issued in the name of the strike off company. So this point is not applicable in the case of strike off companies, because in strike off companies the Companies Act says that after the strike off also the liabilities of the company exist. In one more interesting case, what has happened, that the notice was issued to a company A which was strike off. When the notice was issued, the company wrote to the assessing officer that our company is strike off, so the notice under section 148 cannot be issued to us. In the meantime, the income tax department moved to the Ministry of Corporate Affairs for the revival of the company, and the Ministry of Corporate Affairs got revived that company. So friends, in the Companies Act it is written that whenever a company is strike off and that company is revived by the Ministry of Corporate Affairs, that revival is from the date when the company is being struck off. So in the strike off cases, this rule that a notice issued in the name of a entity which is not in existence sometimes do not apply. So it depends upon case to case. You have to take the help of various cases on that. But in case of the strike off companies, the courts are little on a different mood to give relief completely, because in the strike off cases the Companies Act says that the liability of the company exists, but still we can take this ground that this company is not in existence, so the notice issued is not valid. If the company gets revived, then the notice will also get revived. If the company does not get revived, then the notice, as per my understanding, will not be valid in law. Now friends, the next concept comes the notice under section 143(2). Generally, it is understood that the notice under section 143(2) is to be issued only for the assessment proceedings which are being initiated against the assessee under section 143 subsection 3 order. But friends, my point is that the notice under section 143 subsection 2 is to be issued in all assessment proceedings, like section 148 proceedings also. For example, the notice under section 148 is issued to you. You filed a return of income. Various notices under section 142 subsection 1 were issued to you. You made the compliances. But up to the passing of the assessment order, the assessing officer forget to issue the notice under section 143 subsection 2. Friends, in that case, that assessment under section 147, if the notice under section 143 subsection 2 has not been issued to you, and the assessment has been completed, friends, your assessment will be bad in law. So please verify at least in the earlier assessment orders, because now the system is computerized. But even nowadays also they are making this mistake that the section 143 subsection 2 notice is not issued. So that assessment is bad in law if the notice under section 143 subsection 2 is not issued. And more interestingly, the rule is that the section 143 subsection 2 notice as on date is that if the notice under section 143 subsection 2 is not issued within 3 months from the end of the financial year in which the return of income is being filed. I am saying within 3 months from the end of the financial year in which the return is filed. If that notice is not issued within that period of 3 months, and even if it is issued after that time, that notice will be treated as if it has not been issued. So please verify the dates, that whether the notice under section 143 subsection 2 has been issued on time. If it is not issued, then your assessment is gone. If it is issued but not issued within 3 months from the end of the financial year in which the assessee filed the return, then also your assessment will be bad in law. Now friends, the next point comes that can the return filed in pursuance to the notice under section 148 can be revised or not? Friends, if we read section 139 subsection 5, that is for the filing of the revised return, that section makes it very clear that only those returns can be revised which are filed under section 139 subsection 1 and in pursuance to notice under section 142 subsection 1. But if we take the strict interpretation of law, because the rule is that one should not read what the eyes does not meet, meaning thereby that if something is missing in the law, you cannot read it because it is not written in section 139 subsection 5 that you can revise the return under section 148. So friends, as per my view, the return under section 148 cannot be revised. Now friends, a very interesting point comes that, for example, if the assessee has not taken some income into his return of income filed under section 139 subsection 1 and the notice is issued to the assessee under section 148 and the assessee realizes that some income has escaped assessment and he files the return under section 148 and includes that income into that return, and the assessment is being completed by the learned assessing officer. Now after that assessment is being completed, the assessing officer issues the penalty notice to the assessee and imposes the penalty for furnishing inaccurate particulars, concealment of income, or underreporting or misreporting. So my point is that, my question to you is that whether the assessing officer can levy a penalty on this amount which was shown by the assessee in the return of income filed under section 148, but he has missed that income in his return. Friends, for this the various case laws are that if the assessee has come forward and shown that income into his return under section 148, then it should not be treated as concealment of income and penalty should not be levied. But the revenue takes the plea that if we have not issued the notice under section 148 to the assessee would not have shown this income, but the court takes it very favorable in the favor of the assessee and says that if the assessee comes with clean hands even at the time of filing of the return of income, the penalty should not be levied. So friends, my point is that if you feel that there was some genuine income and you show that income into your 148 return, then you can skip or you can just escape from the penalty by taking the shelter of those cases. Now friends, the next point comes that, for example, if the assessee has not taken some ATC deduction at the time of filing the original return under section 139 subsection 1, But the revenue issues the notice under section 148 to you, and you file your return of income, and you take those claims which have been skipped by you, whether it is ATC deduction, ATG deduction, or some new claim like ATIC or something like that, or section 54 exemption. So can we take this new claims which we have skipped in the original return? So on this, the various case laws are that, and even the language of section 147 is very clear that section 147 is for the benefit of the revenue and it is not for the benefit of the assessee. So broadly, one cannot take the new claims which he has not taken in the original return of income, because it is for the benefit of the revenue, it is not for the benefit of the assessee. Because generally the section 148 notices are issued for the purpose of assessment, reassessment and recomputation where the income has escaped assessment. So you cannot take the benefit for your own mistakes. Now friends, as all we know that in the old regime, the notices can be issued up to 6 years, and in the new regime, the notices can be issued up to 10 years. But there is a bifurcation in the new regime, that is after 1st April 2021, that up to 3 years, if the income escaped is any amount, they can issue you the notice. But if the income escaping is 50 lakh or more, then they can go beyond 10 years. So the point is that whether as on date, the revenue can go back to the last 10 years. So for this, the section is very clear, the provisions are very clear that whenever a notice is being issued to you, then you just first determine the point that whether the notice under old law can be issued to you. Take a simple example. If the case is related to assessment year 14-15, earlier the maximum time was 6 years, so this notice can be issued up to 31st March 2021. So whether the revenue can issue the notice as on date? No, because in old provisions the notice cannot be issued today. But if you see the new provision, if you will add 10 years in the assessment year 14-15, it can be issued up to 31st March 2025. So for this, the simple test is that, you have to see that whether the notice to you can be issued under section 148 in the old regime. If it cannot be issued in the old regime, it cannot be issued in the new regime. Now the point comes that if you come to know that if the notice can be issued in the old regime, then you have to test it whether it can be issued in the new regime. For example, if the assessment year is 18-19, if you will add 6 years, then the notice can be issued up to 31st March 2025. So the notice under section old act can be issued to you. So the notice under section new act can be issued to you. But if the income escaping assessment is less than 50 lakh, then it cannot be issued beyond 3 years. So the notice under section 148 cannot be issued to you in the new regime also. So the test is that if it can be issued in the, it cannot be issued in the old regime, it cannot be issued in the new regime. If it can be issued in the old regime, then check whether it can be issued in the new regime. If the conditions satisfy, then the notice will be valid. Now friends, as all we know that the assessment in the cases of search and seizures are being completed under section 153A and 153C. If we see the history of the income tax, then earlier also in the beginning of the Income Tax Act, in the beginning era of the Income Tax Act, the assessment in the such cases also being completed under section 148. Then block assessment concept came. Then section 153A, 153C came, and that existed up to 31st March 2021. But now again the law has been changed with effect from 1st April 2021, which says that even in the cases of survey and search, the notices under section 148 and the assessment under section 147 will be completed even in the cases of search also. This there is a very broad shift, because now in a span of 20 years or 30 years this law has settled, but now again a lot of litigation will come in this regard, because now again the rule has come that even in the search cases also the assessment will be completed under section 148. Broadly, the rule is that in case of search, the revenue can go up to 10 years. For the 3 years, it will be presumed that the revenue has the information. They do not have to show that that some information is there. It will be deemed that they have information. But for issuing the notice, the rule is very clear that they have to take the permission from the higher authorities to issue you the notice, and then they will complete the assessment on the basis of the material which has been gathered by them during the search. Friends, I have tried my level best to cover all the points. There are a number of the points, because section 148 is such a big section. A lot of points are there. For example, one more point we can discuss, that whenever a notice is issued to you under section 148, then please check your jurisdiction. For example, there are guidelines of the revenue that the cases up to 20 lakhs or something like that will be done by assessing officer, and after that the assessment will be done by the assistant commissioner. Earlier, because the faceless regime was not there, then we can challenge this ground, but my point is that we can also challenge, we can also take this ground nowadays also. For example, I am an individual, my income is 60 lakh, my assessing officer should be Assistant Commissioner of Income Tax, but the notice under section 148A clause B is being issued by the assessing officer, because my jurisdiction comes with the Assistant Commissioner. So my point is that if the income escaping assessment, if the returned income is below that limits which are there in the guidelines, and the notice is not issued by the officer which should issue the notice. For example, if the notice is to be issued by Assistant Commissioner, as in my case, because my income is 50 lakh, then the jurisdiction comes with the Assistant Commissioner, and if the AO issues that notice, then the notice will be bad in law. Even the notice under section 148A clause B will be bad in law, because he does not have the jurisdiction to issue that notice, and vice versa also. For example, if the notice is to be issued by assessing officer and the notice is being issued by the Assistant Commissioner of Income Tax, the revenue cannot take the plea that the higher officer has issued the notice. If the notice is to be issued by AO, it should be by AO. Their powers cannot be delegated to each other. And in this series, one point is there, that for example, if an assessee is of Shimla and his jurisdiction was with the Shimla assessing officer, now his case is being transferred from Shimla to Delhi by passing the order under section 127. The case is transferred, but the PAN number is not transferred. For example, 10 days back, 127 order was passed that the jurisdiction of the assessee is being transferred from Shimla to Delhi, but the PAN is transferred after 10 days. But in the meantime of that 10 days, the notice under section 148 is being issued to the assessee. So the point is that whether that notice under section 148 is to be issued by the assessing officer of Delhi or Shimla. So the rule says that since the jurisdiction has been transferred from the Shimla assessing officer to the assessing officer of Delhi, so the Shimla assessing officer loses the jurisdiction of over the assessee, and he cannot issue the notice to the assessee. Although in this case the revenue took the plea, that the PAN number could not be transferred because of the technical reasons. So for this the court said that it was your mistake. The transfer of the PAN number is only a click of mouse away, and if you are not transferring the PAN number of the assessee, then you cannot take the benefit of your fault. So my friends, jurisdiction is very important, whether it is in regard to the assistant commissioner or the assessing office or the income tax officer, or whether it is regard to jurisdiction of Shimla or Delhi, or it may also happen that my jurisdiction is with Ward 19(3), for example, but the assessing officer of the company ward issues me the notice. So in that case also, the jurisdiction is very much required, and the notice issued without jurisdiction is bad in law. But in this regard, there is one section 124 subsection 3, which talks about that if you want to challenge the jurisdiction of the assessing officer, then you have a 1 month time from the issue of the notice. So my friends, I advise all my listeners that you should be very active in giving your replies. Whenever you receive the notice, then you challenge the jurisdiction as early as possible and try to challenge it within 1 month, because if you loses your right, then you can lose your case, because jurisdiction is a very important point, friends. Now friends, one more point I am taking, that there is section 150. Although this section is not very much discussed, but this is important in one respect, that all we know that there are timeliness for the issue of notice under section 148. At present, the notice can be issued under section 148 up to 10 years. But section 150 is there, which says that if some appellate authority or CIT appeal or High Court or the Supreme Court passes an order, and if in that assessment order, if in that appellate order, it is determined by the court that some income should come not in the hands of the assessee but in the hands of some other assessee, then in that case the revenue has the power to issue the notice to that other assessee for infinite period of time. Then this 3 years or 10 years will not apply. And one more case is there. For example, if tribunal is deciding on a case, and in that case it is decided by the tribunal that any income pertains to some another assessment year other than the assessment year for which the income of the assessee has been assessed. For example, some addition has been done in the assessment year 16-17, but the tribunal later on comes with the point that the income relates to the assessment year 13-14. Then that 3 year or 10 years period will not apply, and the revenue can issue the notice for any period of time. But for that also, one safeguard is there, that when the Principal Commissioner of Income Tax receives this notice, then he can issue the assessing officer can issue the notice within 1 year from the end of the year in which the Principal Commissioner of Income Tax receives the order of the appellate authority. Friends, I have tried to cover maximum points, but section 148, such a huge section, because this section, although maybe less in number of pages or something like that, but this section can be understood only with the help of the various case laws. I have tried my level best in this 1.5 hours that I can give you my maximum. But if you still want that you should get some more knowledge, then I suggest you that you read the cases on the regular basis, and you can see my YouTube channel. There are a number of the cases, because in every case some new point is there. So the knowledge is never ending process, and you have to read more and more to get aware of those rules. Thank you, friends. Thanks a lot for the patient hearing, for giving your so much of the time to me. Thank you.